What's going on, guys? Bexio, and today we had a brand new video on plug power, focusing directly on plug and a lot of other macro things that are affecting it and why it is down so bad right now. But before we jump into all that, if you are not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But let's jump into this plug chart right here, and you can see the daily. Obviously, been a pretty big downtrend since last month on the 22nd. So we're coming up on a month of a downtrend in plug here, and a lot of macro things. But recently, this other downtrend again was from the Federal Reserve meeting that's happening tomorrow. There's a lot of fear that you can see in the entirety of the market. I mean, Apple down 1.25%, Tesla's down, Microsoft is down 4%. There's a lot of these giant companies that are going down because of the tapering fears, the interest rate hike fears, all of this stuff. But focusing on plug here, we can see we're about $30 right now, and we're heading, what it looks like, heading to this 28.37 line here. But this should be massive support if we end up going down this far, which at this point is a possibility. So looking at the 30-minute, obviously, you see we tried here to kind of get back up to an uptrend, break this downtrend, tried real hard, but ultimately didn't do enough, fell back down on this Federal Reserve meeting news. But hitting this 28.37 wouldn't be the worst thing in the world as long as you bounce off of it and try and bounce up. So there has been a lot of good news coming out of plug, like their new partnership they announced, but looks like, you know, people aren't putting so much value into the partnerships right now. You see, this is the partnership they have, the Certarus and Plug partner on green hydrogen supply and expansion of distribution infrastructure. So this is something you see right here, Plug to supply 10 tons per day of green hydrogen to Certarus, don't know if I'm saying that right, to serve as preferred third-party logistics provider. So there's been a lot of things, partnerships shaping up, infrastructure being built out by Plug this year, and I think it's massively important because a lot of the stuff being written off now, these partnerships and things, but these are what's going to push forward the move of Plug, be able to get profitable, start actually producing and getting closer to that, and improve their financials. So right now, their financials are not great because obviously they're losing money, they're growing, they're trying to do all these things, but this is what's going to push them forward to their goal of 2024 profitability. That's the biggest date right now. So we have about 2 years till 2024. We're literally, what, 15 days 2022, and it's going to be 2 years there, and see how they actually get there, how their financials look. That's going to be the first major step. Looking at this partnership, we can see obviously this 10 tons of green hydrogen per day, and it's going to start with initial deliveries in Q1 of 2022. 2022 is going to be a massive year for Plug to start pumping out hydrogen. They built 2021. They built tons of infrastructure. They built their plants across North America. They built stuff in Europe, in Asia. They're really trying to build out their infrastructure. 2022 is the year where all those things go into production, and they can actually start producing and delivering hydrogen, and we'll kind of see how their business plays out for that year. And the end users, including mining, power generation, natural gas, midstream, and industrial energy users. So starting at like the top big guys, you can't just go into a market that's not using hydrogen, like everyday cars, and try and convert it. That's going to take a longer time, and could be something more like end of the decade type thing. But this is where it's going to start, these like big categories. And then they're also partnering with supply equipment from Plug, so that's cost effectively serve these customers' needs. And then this is a quote from the CEO of Plug off this partnership, saying we're building out green hydrogen ecosystem with the goal to deliver 500 tons per day of green hydrogen by 2025 and 1,000 tons per day by 2028. So this is stuff that you got to look at longer term and make sure you see the growth, because right now they'd be at what? This would be 10 tons. So 2024, which is when they want to be profitable, they got to be close to that 500 tons per day delivered to hit their own goals for their own company. So, and these are big, lofty goals. So keeping track of this production, seeing how they're doing, is going to be a good way to tell if they're moving in the right direction. I think that they are. And continuing that quote, the partnership with Certaris is a meaningful step in building out the green hydrogen ecosystem to serve large energy sectors and in providing Plug Power the ability to flex and scale our overall delivery capability. So this is what the partnership's for. So investors are not super thrilled and excited about these partnerships anymore because there's been so many, but these partnerships are building onto Plug and their ability to deliver hydrogen, make money, and become profitable. And that's how they're going to do it, by delivering on their partnerships. And that's a building step. So 2021 was building all these things, building infrastructure, building partnerships. 2022, we should start seeing them producing hydrogen, delivering hydrogen, and start seeing how that's actually going. And that'll be a much better look into their company, as well as revenues keep going up. As long as that's still going good, they can still be losing money because it's not till 2024 they're supposed to be profitable. But looking at their earnings too, this is the big thing to keep in mind for losing money and their ability to lose money and still grow. So $3.37 billion on their balance sheet is a massive number because they'll be able to continue growing through the taper. So the taper is going to be bad for a lot of companies that have been relying on cheap debt to stay in business and keep going. And I think we might see a lot of these companies go under if they can't keep growing their company and getting cheap debt. But Plug doesn't need the cheap debt because they already have the money on their balance sheet. So they have the ability to go to 2024 profitability without needing to dilute shareholders more or rely on cheap debt that won't be there because of the taper going on. Then you see right here talking about bears in control of PayPal, Plug, Virgin Galactic stocks. When will it end? Basically, this is just like TA type stuff. You can see Plugs here saying it's entered a downtrend. We saw that November 22nd. This part, it says right here, if the stock falls below the $31 level, it'll confirm the downtrend with a lower low. So currently, we are under the $31 mark. So we are still in a downtrend, but it's not some terrible end of the world type things. There's no support in this level from 39 to 28. So breaking down here and going down, there was no real big support other than trying to see if it's breaking downtrends, and it's not doing that. So if it runs down to 28.37, not the end of the world, as long as it bounces off that. If it doesn't bounce off that as like a support, maybe bounce enough to break this downtrend, try and get back to an uptrend, or at least trading sideways, then we might have bigger problems going on. But looking right now, there's also a ton of outside Plug's control going on with the macro environment, with the Fed tapering, Fed interest rate hike risk, lots of unknown in the market, and no company's immune to that. And we all know Plug is very volatile, it's very risky, and it's a growth stock. It's betting on the future of them being able to grow than what they are right now. And these macro events that they can't control is going to make Plug super volatile. We see all these companies that are amazing, down 4%, Microsoft, Apple, 1.34%, and Apple was rallying in the last week. And even Apple is not immune to what's going on in the macro environment. So when you're looking at Plug, if you're saying it's down so much and it's so bad that you just have to zoom out and look long term that they can sustain themselves. But right now, it looks like they can, as long as they don't blow the money on something ridiculous or continue using it at least to grow themselves. They have plenty of cash to go to 2024, and that is where it's going to majorly affect whether or not it's worth still being in Plug if they're profitable by then. And then 2022, this next year coming up, we should start seeing them producing, seeing how it goes, and I think that they're going to make moves in the right direction. But Plug Power, it still looks fine long term. Short term, anything can happen. No one knows what's going on, and a lot of different things control short term, especially things outside of a company's control, like we've seen. No one is immune to those. The whole market is not very happy about what might be going on. It's very uncertain. Markets hate uncertainty. Plug is risky already. Add that on the mix, and it is just getting more volatile all the time. But that's going to do it for this video. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.